Hello and welcome back to a New Year's edition of Raise Your Wealth. In this video, we're going to be taking a look at what's been transpiring in the markets recently, as well as over the past year, how my investments have been performing recently, as well as my plans into 2022. If you do find this video useful or informative, don't forget to drop it a like and subscribe. But with that said, let's get straight into it. So to start things off, looking at the market as a whole, the big indexes for the most part have done really well and are ending the year near all-time highs. The US S&P 500 is around 1% from its all-time high. The Nasdaq 100 is around 2% from its all-time high. And both of these indexes in the past year have managed to gain about 27%. So that's quite a massive return on your investment depending on when you bought in, despite some of the volatility, especially in the Nasdaq 100 this year throughout the sort of March to May period. And even our own local ASX 200 is only a few percent down from its all-time high, and has managed to do about 11.5% this year, not including the dividends. So looking at this, you would think everything's going well, everything's up, but it's not always the case. Just because the market, broadly speaking, is up, there are still things that are doing quite badly or underperforming. You look at things like ARK K, for instance, which is sort of the darling child of Cathie Wood's ARK Invest fund, and that is down 22.85% for the year after doing over 100% last year. And that's because a lot of sort of growth orientated companies are not doing too well right now, especially the ones that aren't making any profit. And you have another ETF in Australia, the ASX Betashares Asia, which is sort of a compilation of Asian tech, that is down 19.28% for the year. And that's mostly because of what's going on in China right now with regards to Evergrande, as well as a lot of the government's crackdown regarding tech companies and a bit of the uncertainty regarding what's going to happen in the future with them. And another recent addition to the ASX, the Betashares CRIP ETF, which tracks crypto involved companies, is down over 30% since its inception in November. And this is because, as one would expect, a lot of these companies, such as MicroStrategy or Hut 8 Mining or Galaxy Digital, they're very much tied to how the crypto market's doing and how Bitcoin's doing at any one time. And in the past month and a half or so, crypto has fallen off of a cliff, as I will sort of get to in a moment. And some of these ETFs are prospects that I'm considering investing a little bit into, just as sort of a speculative risky play, depending on how the price goes and whether there are other opportunities. But it just goes to show, just because broadly speaking the market's up, it doesn't mean everything's up. Companies like Apple, Amazon and all that, they have an outsized sort of influence on how these indexes, and Apple in particular is the biggest company in the world right now, and the way it moves the indexes cannot be understated. A 1 or 2% move from Apple can pull up or push down something like the S&P 500 more than one would expect. But anyway, that's just stocks in a nutshell. But regarding the crypto market, it is still kind of struggling at the moment. Bitcoin's kind of bobbling around the 46 to 47,000 USD mark right now, and seems to be sort of struggling to launch after its massive liquidation event early in December. It's gotten over 50,000 USD a few times, but it just seems to be sinking back down at the moment. And this is just part of the course of crypto. It very much goes through hype cycles, and it's very much dependent upon how much media attention's being focused on it and how the narrative's been spun at any one time. And I do have crypto investments, and both within my Raiz account and outside of it, and I'm not particularly concerned. I've seen this cycle before. I've seen how people can flip things around and say how Bitcoin's going to zero, crypto's bad, blah 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 blah. Then the next week it's crypto's the best thing ever, or X bank or X country has bought into it, and it's just a long-term sort of thing. And on the whole, altcoins seem to be suffering a lot more. They obviously move with a higher beta both up and down than Bitcoin, but at the moment, the last month or so has been a little bit obviously disappointing for crypto holders, but hopefully that sees a bit of relief. I mean, something like the announcement of a spot Bitcoin ETF would bolster things up and see a rally again, most likely. But that's enough of my speculation. Let's take a look at what's been happening in the Raiz Invest portfolio recently and look at the past year. So right now, the Raiz Invest portfolio sits at $118,023 with an overall change in value of $16,929, which is an overall gain of 24.48%. And for the 1 year, it is up $12,818, which is a gain of 15.16%. For the 6 month, it is up $9,879, which is a gain of around 10%. For the 3 month, it is up $6,529, which is a gain of 6.22%. For the 1 month, it is slightly down, being negative $238, which is a 0.2% decrease. So overall, it's been quite a good year for the account. It's been a fairly steady rise upwards for the most part, and I think the most notable thing to happen this year, and this actually happened very early in the year, was the addition of custom portfolios. And I think, at least for me anyway, that was a very game-changing feature, because it allowed us to sort of make our own decisions regarding what we do with our portfolios and shed some of the things like bonds and the money market allocation, which don't really do much a lot of the time, and sort of build the allocation that I've wanted. And this has been a good and a bad thing for me. Mostly good. Obviously a greater stock allocation means greater benefit during the sort of uptrends, but it also does hurt on the downtrends not having any bonds. Obviously, like, look here in February of 2021, we had our first little dip. We dipped around March, rallied a bit into April, but again towards May we sort of dipped again. But overall the trend has been very, very much up, and anytime there's been sort of a significant dip, I've put a lump sum there to sort of try and capitalize upon that. And one thing that I didn't realize till I looked at it just now is, in the past year, my account has more than doubled, going from this time last year, my account was sitting at right around 51,000, and now it's 118,000, so more than double. And granted, the majority of that is still incoming investment, but still it sort of reflects sort of the greater scope of, I guess, my investing world now, and how much the account has grown, and even the gains and movements now are much more pronounced. And instead of moving like a couple of $100 in a day, it's not uncommon to see $1,000 or $2,000 movements each day. And a lot of the growth has been steady dollar cost average investments of around $100 per day. I did put a few lump sums in back in May and October, but for the most part it's just slow, steady, consistent. And this is what the account's all about: slow, steady growth. It's not a crypto account, it's not penny stocks. This is broadly investing in a few ETFs and, you know, time in the market, essentially time in the market. And I think my one failing with this account is that sort of a few times I've slightly altered my ETF allocation when I should really have just left it well enough alone. I think I'm at a point now where I'm very happy with the allocation and I won't touch it anymore, just because the account's getting to the size now where capital gains tax is a real potential issue now, and changing a portfolio or changing the allocation can potentially lead to thousands of dollars in taxable events, trades each time. So I don't really want that. So from now on, it's going to be sort of set the way it is. And for those that are unsure of my current portfolio, here it is. It's 30% in FAIR, which is the Betashares Australian Sustainability Leaders, 20% in NDQ, which is the Nasdaq 100, 10% in Vanguard Emerging Market Shares, 35% in global socially responsible large cap with ETHI, and 5% in Bitcoin as a bit of a speculative play. So this is obviously not going to be for everyone, but I have a reasonably high risk tolerance and I have cash outside of the portfolio, so I don't really need to have a bond or money market sort of allocation there. And right now, where are we? Let's go back to the past. I've been putting in $100 a day, as I have been for most of the year, and I'll probably either continue $100 a day, or if I don't find sort of a better sink for my money, I could up this to $175 or $200 a day. To be perfectly honest, I did mention last video that I would like to get this up to around 200,000 by the end of the year, and if the stars align, that is definitely still the aspiration, but it's going to depend on how other things go, how say crypto goes, or how the general market goes. I don't want to leave myself entirely without cash either, or be without an emergency fund or something. I still do want to have a ample amount of dry powder, so to speak, if the market did take a sort of massive dip. And obviously we still have the concerns about how the the US Fed and all that's going to handle sort of rate rises, and how central banks around the world in general are going to handle increasing of rates and all that sort of thing this year. I mean, the past year, 2021, was more is inflation going to be transitory or more permanent? And we've come to sort of the position where we realize that inflation is a bit more permanent than we thought, and it is going to require sort of rate rise intervention. And the US Fed has said they're going to increase rates sort of early next year, so it'll be interesting to see what their schedule is behind that. If it goes sort of according to plan and according to schedule, there won't be that much of a market movement. But if they raise rates quicker and more unexpectedly than the market anticipates, that's when you'll see significant fear. But that's what it is for now. The Raiz account's still doing well. Just to take a very quick look at the superhero account, which does have Raiz Invest shares, I did buy some RZI a few months ago, and it is sitting at a tiny little loss right now. It's down about 1.38% from my buy-in price, so it was a little bet of $2,000. It doesn't really bother me, but still sitting there, still almost at break even. It's kind of bibbed and bobbed around the last few months, but right now it's almost at break even. So that's what's happening there. As for Swyftx and the crypto side of things, as I sort of alluded to earlier, the crypto has taken a hit in the past few weeks especially, and every coin, be it ETH, BTC, or the various alts, are all down 10 to 20%, and that's to be expected. Crypto moves with far more volatility than ETFs or stocks do, and what I'll probably do is, should this red continue, I think the best way to get the cost basis down will just be to add more sort of dollar cost average in as the weeks go by, and especially if it's a more protracted sort of downturn in crypto, that might be a way to sort of lower my cost basis, so when the rally does come around again, I'll be better positioned. But again, this is money I can afford to lose. This is money that, even if the $8,900 at the moment in here does go to zero, it will not really impact my financial future in a big way. So I'm not really sweating this at the moment. If anything, it's a bit more of a motivation to add more to it. And I think what I'm going to do though is any addition will mostly focus on Bitcoin and ETH, because they're obviously the two biggest by market cap, and they may not grow as much as some of the others just by virtue of their size, but just thinking about it over the years, there have been so many altcoins that have come and gone and risen out, in and out of the top 20, that it's anyone's sort of guess. Like, at one point, things like Litecoin was like number 5 or number 6 or something. Now it's way down, and to me, I'd rather take smaller gains with a higher probability of it rising if the entire crypto market goes up than potential for higher gains but lower probability. But that's just me anyway. And on the crypto side of things, I did mention last time on Binance how I had a crypto trading algorithm set up called Stoic, and I was going to see how that has gone, and the answer of how it's gone is about the equivalent of hammered dog shit right now, because for the month it is down around 28%, because it invests almost entirely in altcoins, and it has been wrecked. Even relative to BTC's trend, it's had the crap kicked out of it, and I'm not selling it. I'm not giving. I'm going to hold this till zero if need be. This is just I want to see how it goes. I'm sure once crypto does recover and more of the altcoin investments do start to take off, this will do really well. But it's a case of extreme volatility, and I'm glad I've only got literally a few $1,000s in it, so it's not really keeping me up at night. But I find it more funny to watch than anything at this point. It's more just entertainment value, and be interesting to see, like, in a bull market, to see whether it starts to outperform Bitcoin again like it did before. Because for one, at the start, when things were bullish, it was performing really well, and I think it's just one of those trade-offs of more down when it goes down, more up when it goes up. So I'll stick with it 6 months a year and see how it goes. But that's sort of how everything's performing at a glance anyway. And I think what I'd like to do is, this year, as I sort of mentioned with Raiz and everything, to hold on to things a little longer, just because, you know, chopping and changing all the time, it can lead to tax issues with regards to sort of like, I'd rather hold things for over 12 months, and if it's in a profit, get reduced capital gains tax paid on whatever I'm invested in, just because now with sort of the amounts going up, it's going to be more and more of a tax bill if I chop and change around. But that's just what I'm going to be doing on that front, and, you know, continuing to build a bit of a cash reserve as well. Now in the new year, I should be getting a little bit more of a pay, so it should allow me to build up the Raiz account and still have some money each week put aside for that I can put in my offset account, which, you know, can sit there and, you know, earn the equivalent of a few % at least anyway, and be liquid and available should I need it. But that's just sort of what I'm going to be doing into the new year. A bit more of the same. You know, there's really at the moment, the few sort of ETFs that I'm looking at, like ARKK, potentially Asia, potentially CRIP ETF, you know, depending on how much further it goes down, maybe Monday next week or whenever the market opens, I'll buy a few of those and stick it in my superhero account. But what are your plans for the new year? Let me know down in the comments below. From an investment, not just from an investment perspective, but from a personal development perspective, what are you intending to do with yourself in the new year? Is it sort of build to a certain investment milestone? Is it sort of something regards to personal growth, like get in shape, get fit? Is it something regarding work? I'm really curious to hear what you intend to do, because for me personally, I don't want to work as much in 2022. Like the past couple of months, I haven't been able to work on these videos and enjoy my downtime as much, just because of my workload. And while the money is nice, I would like to go back to the way it was, but that's just what's been happening in my side of the world anyway. As always, if you did find this video useful and informative, don't forget to drop it a like and subscribe. But with that said, my name is Rich, and I will catch you guys in the next one.